What's up, guys? Frugal VC. Crypto markets are crashing. The regular financial markets also crashing. We're going to look at all of that, the reasons why, and how you should approach it on today's Frugal VC. Before we get into that, guys, if you don't mind, love you to hit that like and subscribe button. Remember, you don't have to smash it. You can just press it gently. Works just fine that way too. Also, quick shout out to Non-Fungible Domains, our channel sponsor. If you're sick of all those complicated letters and numbers and want something a lot simpler to remember, like mine's frugalbc.algo, pretty easy to remember, head on over to Non-Fungible Domains and get your own domain today. But let's get to this cycle, because these are crazy times. But this is part of it. This is part of investing. This is what we're going to talk about today, because this is part of being an investor. It's like you're going to have downtimes, you're going to have uptimes. I'm going to tell you my story about my initial investment and how that went. As much as you understand stuff intellectually, it can be really, really tough. So let's take a look at what happened. All right, so this is probably one of the best breakdowns that I've seen that just kind of explains everything that's happened in the last 12 hours. Of course, this is a little bit older, but here's what happened. Black Monday has caused global markets to crash following Japan's stock market closing. The Nikkei was down 13.5%, its worst performance ever, and European shares near 6-month lows. Traders are betting on emergency rate cuts from the Fed to try and stave off a bigger financial crash. Investors expect UK and European central banks to announce significant rate cuts at their next meeting. Now, remember, we were hearing rate cuts for a while. We were hearing that this was coming in the spring, and then it's been pushed back and pushed back. They're always really slow to react. They were really, really slow to raise rates in the first place. When things were just like soaring, that would have been a good time to slowly but surely introduce a rate hike. Just one, and then let it go for a while, let it settle out. Instead, they keep doing this where they have to do it all at once to try to make up. It's been pretty frustrating. Bangladesh's prime minister resigned and fled the country to India after mounting protests against her government's harsh crackdowns that have led to the deaths of over 300 protesters. Yeah, that might be related, might not, hard to say. Trump said, "I told you so" about Black Monday. Stock markets crashing. "I told you so." Kamala doesn't have a clue. Biden is sound asleep. All caused by inept U.S. leadership. Goldman Sachs said it's not a crash, it's a healthy correction that was long overdue. I think there's some truth to that. Days ago, Jim Cramer said NASDAQ futures dropping as if it's the end of the world. Memo to all, it isn't. Oh no, inverse Cramer. Anytime Cramer says something, the opposite always happens. I've seen people defend him who used to work for him, but it's like he's always wrong. He's like comically wrong. So much so that you can almost bet against whatever he says reliably. Anyway, market volatility hit a 4-year high. We're going to show a chart from that because it's pretty insane. Its highest level since June 2020. European traders are awaiting the opening of U.S. markets, which may cause the crash to deepen. Over $1 billion in the crypto market was liquidated in the past 24 hours. $900 million were long positions, $100 million were shorts. In my space, this is Mario Nafal talking. Kim.com warned that Iran's retaliatory attack on Israel would be more serious than the previous one in April. And President of El Salvador, Bukele, said that Maduro's regime has destroyed Venezuela. So let's look at the crypto market, shall we? We've actually rallied just a teeny tiny bit from the lows. We're at 54,000 right now. Ethereum at 24,000. Solana was down at 115. Bitcoin was supposedly crossed below 50,000. It's at 54 right now. So we're seeing a little bit of recovery as we record this, which is good. Anything do anything. Yeah, Helium actually popped up quite a bit. It's actually up 5% on the week. Brett is based 94% mantra. Shiba Inu actually coming back up, and Ondo. Yeah, let's look at the 24-hour. Celestia up 10%. Brett, as we mentioned, Ondo, Binary, Helium. So you are seeing some that even over the last day have actually increased. I don't know if anyone's up on the week, not by much. One called Binary X, which is now in the top 100. Went up, and Tether Gold is up a little bit, but otherwise, yeah, not much up on the week, but we got some 24-hour ones, so that's interesting. So as I record this, actually things are turning around. We still are in fear territory at 31. Usually fear is a good time to buy. I'm not telling you that necessarily. Also interesting is this post from Genevieve, I can never pronounce that name. Genevieve Roque Dector. I used to follow her Substack. I think she moved to a private thing now. I hate when people do that. I really love Substack, and if you leave Substack, you kind of disappear from my purview. I'm not going to be honest with you. Circuit breakers are temporary measures that halt trading to curb panic selling. Here's how it works. Drop of 7% from the prior day's closing price of the S&P 500 triggers a 15-minute trading halt. 13% is a 15-minute halt. 20% triggers a halt for the rest of the trading day. Right now, Tech futures were down 5.96%. I don't think the trading halt doesn't look like we had one. There was a report saying Robinhood would halt its 24-hour trading, but it says nope, it's currently operating, and I don't think we've seen much to suggest that trading actually got halted. So I think we're okay. But this is the S&P. Just looking at the 5-day, yeah, we crashed a lot. Now coming back up, so already working our way back up a little bit. But yeah, in the red today by 2.47%, which, as I recall, yeah, not enough to halt trading. So we'll keep an eye on that. But I think it's probably just a market correction, like they said. Here, this post is from JT Media, or otherwise known as JT Invests in You. A friend of the channel says, down 31% since the high. Bitcoin still has some room to come down. Around 46,000 is the sweet spot right now. Also, we are 2 weeks away from month 5. Looks like 5 to 6 months to break pre-halving high. Looks like a good call. So he's calling it actually to go down further. It looks like we're already bouncing back up, but it could be a dead cat bounce. You never know. We could be headed down further. I guess we'll see. But Bitcoin seems to be following the rest of the market, and the rest of the market seems to be recovering now. So it kind of depends on what the overall market does, I think, is what we're going to see here. By the way, I thought this was really interesting from Mars. He says the USA is just guzzling Bitcoin right now while everyone is asleep or selling. Something is afoot. This visualization is really cool. Also, is that Japan? It looks like Japan and the US is really taking in a lot of crypto, but look at the US especially. I think that's Japan. Hard to say because the map is so zoomed out, but it looks like it's going to Japan from what I can see. So it looks like Japan, and there's like some little spot in Europe is taking some too, but I think that's a pretty interesting chart. AJ writes, crypto friend of the channel says this is a land of opportunity, grade A bull trap. I think when you see stuff like this, yeah, it's definitely a time to buy. So maybe, well, I want to finish with one more thing here. This is from your favorite farmer bro. Martin Scully says this can be mental model here is assuming that there are cycles in crypto at all just because an asset class appears to have reliable trends. That doesn't mean you can assign meaningful labels to those trends. This is just tulip ball bear cycle build. Crypto, especially alts, can go down 99% and stay there. I don't personally believe that will happen, but it is the bear case. The bear case is not whatever this fool posted. Let's see what he said. By the way, some of you are hardcore freaking out right now, but it's worth noting it's okay to be okay. After a decade in crypto, there's one thing that's held true every cycle. The people who build or get involved in communities during the worst times win the most. Bear markets and post crashes seem bleak. They're unexciting and things move slow, but they are the best chance for you to stand out as a builder or as a community member. Both of the opportunities allow you to be positioned for the next cycle. I've seen very few people hit it rich in a bull and keep it. I've seen a lot of people dig in during a bear and turn it into sustainable wealth. Losing money sucks, but shake that off. Because it's in the moments that others are tuning out or licking their wounds, that's where the opportunity lay ahead. This has been the case for me in both crypto and in regular markets. And I'm gonna tell some stories in a second that explain that. When the market returns, it'll be laps ahead of everyone else. Stay safe out there. Martin has some views now. I actually really like his investment series. I highly recommend you watch it if you want to learn about single stock investing and what goes into valuing a stock. I think that's really, really interesting and important to learn. Also, just the way learning about the dollar discounting model was awesome. I mean, that was a game changer for me in thinking about value. So I think I think his series is worth checking out, but also I disagree with him. He's also doesn't believe that people should invest in index funds. He thinks that has a good chance of like going down and losing value, which we've never seen. The index has generally returns about 10% a year on average. So, well, I've seen other people say 7%. So I've seen in the last, I think it was in the last 20 or 30 years or something, it's averaged like 10%, something like that. And I think all time it's been like 7% or something. I think some of his ideas are nonsense, and I think he's right to suggest that just because the cycles have played out this way before, there's no guarantee they will again. But we're not dealing with remote possibilities. We're talking about probabilities, right? So you always have to ask compared to what. And that's what Martin isn't doing here. Martin is not asking compared to what. He's just saying, oh, well, there's this off chance that it could go to zero. Well, yeah, it could. It definitely could. But what are the probabilities? I think the probabilities are that it will somewhat follow the cycle it's always followed every other time. You could say the same thing about gravity, right? Like, it's a theory, it's not guaranteed. But I think we, at this point, are pretty reliably rely on gravity to do what it's supposed to do, right? So it is a theory. It is possible, but I think generally when you have dips like this, pre-bull, I think if we don't count on the Bitcoin cycle, then what are we doing here? Just all invest in index funds, which is where most of my net worth is, by the way. So I'm going to tell a story about, two stories I'm going to tell before I let you guys go. It was when I very first invested. I invested in my first index fund in 2016. I just bought my house, and that was my next step on my financial plan. So I put my first $500 deposit into my index fund account. And right after that, Brexit happened. And when Brexit happened, the markets crashed. And sure enough, my $500 was worth like 460 or something like that. And that's hard. When we haven't done this before, you're not involved in this, those crashes really hit. And I think they always hit. There's always a part of you that it hits like kind of deep down in the gut, even though intellectually, you just got to stay the course. This is all part of it. It's all part of the process and how it works. Emotionally, you feel it, especially if you haven't been through it before. So my intellect got the better of me. It said, yep, stay the course. Next time you get paid, put some more money in. And I did. And today I'm up, well over 100% on my portfolio. But I could have panicked. I could have said, this sucks. Give me my money back, and I'm just going to forget about this investing thing. So one more story about that is during COVID, when the whole COVID lockdowns things happened, the markets crashed like crazy. We had this huge crash, and you know what? I kept buying in, and that's when I hit six figures for the first time in my net worth, is the recovery from that crash. Now, I don't know. Some people are saying this is a recession. Some are saying it's just a quick market correction. Either way, I think it's an opportunity. If it's a recession, if you keep buying through that recession, because you'll be buying at rock bottom prices. And when the market returns, and it always does at some point, if it doesn't, we're in a lot bigger trouble. You won't have to worry about your portfolios. You'll have bigger problems because there'll be mass chaos. But when the markets return, you'll have a huge leg up. So I actually agree with Adam Cochran here. I think he's got the right attitude. I don't think Skrelly is wrong per se. I think you're better off, because what's the alternative? If you listen to Martin, it's like, oh well, I don't know, do what? Like nothing, or sell, or what? He's not really giving you a framework, whereas Adam is actually giving you a framework to follow. And I think that's the way to go. So that's the way to think about it. We didn't even talk about Algorand or a lot of the other coins, but everything pretty much crashed, and now it's starting to come back up. So I generally think these are opportunities. You usually want to buy in greed territory and usually want to buy in fear territory and sell in greed territory. In fact, you could probably just look at that chart, buy when that chart is in fear territory, sell when it's in greed, and you'd probably do all right. One thing he was talking about here, where did he say? Right here, I've seen very few people hit it rich in a bull and keep it. That's because you got to take profits. When you really are in the black, and you should, on the way up, in my opinion, you should be taking profits, because it's going to crash back down, and you want to make sure you're on the right side of that. So that's it for today. I thought this was really important to cover. We'll get some Algorand news out there tomorrow for you, but thanks, or maybe Wednesday, whichever way, however it works out. But thanks so much for watching. If you haven't hit that like and subscribe button already, remember, just press it gently. It works just fine. Otherwise, I'm Frugal VC. Stay safe out there, hodl, and I'll see you in the future.